Welcome to the Black Phoenix Financial Podcast. We are here to teach you finance from the ground up. If you want some quick tips, if you're a complete novice, or in fact, if you're currently trading and just looking for some tips, then we are here and we have got the information for you. My co-host Ethan has been learning this himself. He completely immerses himself in the financial markets. Hey there, Ethan, how you doing?
Hi, good morning. Great to see you, Lee. Great to be with you. Excited to go on this journey together.
Excellent. I'm looking forward to it as well. So for those out there listening, Ethan is the expert. I know nothing. I am the vehicle through which you can learn finances. So my complete lack of knowledge hopefully will be as benefit for you as we go through this. So each and every week we'll be dropping a lesson for everybody in terms of financial markets. We've also got some stock tips from Ethan to give out each week and a few kind of inspiring updates for everyone as well. So we're going to dive straight into our first lesson today. End of the show, we'll give out some stock tips and stuff for people who want to listen to that as well. And just to say, if you like what you hear, if you want to hear more of this, hit subscribe wherever you're listening, Apple Podcasts, Google Podcasts, Spotify, YouTube, hit that subscribe button, leave us a review, and don't forget to follow us on our social media as well. We are, for the show, we are at BP Financial Pod, and Ethan, your Twitter handle is?
At T4A Phoenix. Phoenix is PHENUX.
And I don't forget to go out there, give a listen. There's lots of good lifetime tips coming through as we go. So what are you going to teach me this week then for my first foray into this world?
Well, I'm excited to teach you and all of our listeners. I'm not an expert, very much so. I'm not a professional. But what I am is someone who's been able to spend a great deal of time in the market the past few years. More time probably than a good percentage of Wall Street people because of my circumstances. So I plan to share some of the things I've learned along the way. Some of the things I've learned are fairly simple. Some of them take a little bit more dedication and discipline. So we'll just start from square one, learning about the market, learning about supply and demand, a little bit about charts, and a few books to read, and some simple practice that a person can do, say in their spare time. If they have another job, they can come home and do some of these things in their spare time. It's nice to get an education on the side, especially if you have a full-time job, because then you can supplement that income, or if the time comes when you can no longer rely on that income, you now have something to fall back on. And especially with COVID, we've seen that having an education and being versatile, especially in a time of pandemic, really pays dividends. So with the financial market, the baseline to start with the financial market is just honestly turning on CNBC and getting familiar with the discussions about companies. The companies are listed in a abbreviated way. It's called a ticker. It's usually a 4-letter abbreviation for a company, but it can be as low as a 1-letter abbreviation, and I believe it can be as high as 6 letters for companies that are distressed or going through bankruptcies. An example of a 1-letter abbreviation for a company would be T for AT&T, or one that I traded today would be C for Citigroup. An example of a 4-letter ticker would be for a company named Microsoft, very familiar, MSFT, I believe is the Microsoft ticker. An example of a 3-letter ticker, abbreviation for a company would be Wells Fargo, and that's WFC. So there's all different abbreviations. Usually the abbreviation looks like the company. And one of the things that I want to get out there right at the start is the way I pick stocks is very, very different than a good portion of the investing community picks stocks. I do not care about the company at all. well, I do care about them to a degree, but I care about them to the degree that they can be a vehicle to make me money, a probabilistic vehicle. So some of the information that happens on Wall Street when they tell people how to pick companies to invest in is they say, pick a company you like. Pick a company that goes along with your ethics or morals or what you believe in terms of green or this or that. But the ultimate focus of the investment community is to be profitable. That's the bottom line, is to be profitable. So the way I look at companies generally is I look at extreme fear primarily for purchases. And then I also look for extreme exuberance to potentially take a negative bet against the market, which we'll talk about later in episodes, because taking a negative bet against the market is a little bit more complicated than buying. Some of these things that I trade and watch would be considered high risk, because many of long-term investment purchases, they purchase a company with the idea of owning it for a lifetime. I don't do that. I purchase tickers for a very short period of time often, and I try to always beat the last price. What I do primarily is swing trade, so I hold stocks for a few days to a few weeks, and then I will manage them intraday. I very rarely anymore, I learned intraday trading, but very rarely anymore do I open and close a position in the same day. I hold very small amounts of positions that I'm interested in companies, just one ticker, the minimum I can hold, to get familiar with the price action. And it's a lot easier to remain balanced in your portfolio if you avoid large amounts of money being involved in the market, especially during high times of volatility, because I feel like a lot of the beginners in the market, they try to time the market. When the market goes down, they sell. When the market goes up, they buy, and they end up in this reverse situation where they're buying at the highs and selling at the lows. And I've found that waiting in cash as much as possible for the best opportunities is one of the hallmarks of ones who can be profitable in good and bad markets. Because the facts is that 90 to 95% of day traders fail. So the odds are against someone from the start. But those odds, they're not based on intellect generally. Most traders, even in the most advanced aspects of trading, will tell you, you don't have to be crazy smart. You don't have to go to MIT. But what you do need is you need an emotional and psychological discipline. So for most people who are learning and starting out, that needs to be the focus. And so avoiding high risk exposure with like a whole account in a specific direction is the way to get that psychological conditioning, because you have to be able to see markets go up and down day in and day out. You have to be able to see some of the momentum plays move day in and day out. And if you have another job, one of the ways that you can do this is you can just be aware of what the market is doing and set alerts on your phone. So even during the day, I mean, most of us, even if we have a full-time job, we get text messages from a friend. We don't have to necessarily look at them or read them, but they're there to tell us kind of what happened when we're not able to look at the market. In any of the individual brokerage, they have those type of alerts that you can set for when a stock is doing one thing or another. But some of those things, I guess I'm getting into more of the focus or the psychology of the market rather than just setting up an account. The best way to, I believe, to set up an account is definitely to start small. Start with the minimum, like we talked about, just to set up the account. And the word of today for our very first episode is actually simulation. What a simulation is if you think about a pilot, or say even a youngster who says he wants to be a pilot someday. He will sit there at the computer and he'll get familiar with the rudder, the flaps. He'll get familiar with the idea that up is down and down is up. There's a lot of psychologically backwards conditioning that you have to learn to become a pilot. And many pilots, and even in the Army, the combat military, they use simulations, they use quote video games to learn. And these video games actually are, in my opinion, and in the opinion of others, are worth their weight in gold, because the way to be involved in a highly profitable avenue without any risk to capital. And what that means is that you can, the number one, everyone in the financial community will say the number one thing a person needs to learn from the bottom is screen time. So what simulations do is they give you the ability to be in front of the screen and involved in the market without taking a hit. Because taking hits, it hurts, believe me. Fortunately, I've blown up in simulations so many times that I've avoided taking big hits in real life. But I did take one big hit to $1,000 account, which I'm a poor guy, to start. It was $240 hit. I got caught in an offering, which is a company trying to raise money by offering their shares at a lower price. So it was like a 20% haircut on over 20% haircut on over a $1,000 account.
So if it makes you feel better, I'll just say I know nothing there, and I've started scribbling notes down, because that's how I take in information, and there's loads of great stuff there. So I feel like I'm immersing already. My only real experience was, and inspired by someone that I worked with who's really into it, I stuck some money into cryptocurrencies when they were going all crazy, and I got completely lucky. No judgment, nothing else. And I got really lucky on Ethereum, and I made about £1,000 out of it. We will, by the way, for people. I'm over in England here. Dylan's over in the States. So we will flip between pounds and dollars. It all means the same thing. It's all money.
It's all money, right?
I made £1,000 in that. And then something else, and I did it maybe when you said about people buy when it's on the way up and they sell when it's on the way down. So I saw something else and I thought, I'm going to get lucky twice. And I went in on something that was exploding, and I literally bought at the peak. And currently, that £1,000 profit that I made is currently worth 3p. So not knowing what I'm doing, I took near enough 100% haircut on that one. So that's and now I've got a bit of money that's sitting there and I do nothing with it. So I'm really interested in getting, like you said, and I think if I've understood it right, and so I hope for people listening, but more for me, it's not about reacting to the market. It's more about reading it and understanding it and being able to interpret where it goes rather than just following the trends. Is that about right?
The trend is your friend, generally. One of the things I learned from Jesse Livermore, and Jesse Livermore is one of the classics. He's kind of like a rock star in the financial world because he made and lost millions very quickly. He has a lot of clout, kind of like a Warren Buffett type in the market. So Jesse Livermore, one of the things that he said being late to a trade is confirmation that you're in the right area. And that's an interesting thought, because being late to a trade generally would mean that you missed it.
Yeah.
So what you talked about there is the conundrum that a lot of people find themselves in, is that if a stock is showing strength, you purchase it, and you even figure, if you're following Jesse Livermore's idea to be late, like, wait a second, I bought it when it was strong. I felt like I was late, and I was late, and that's, you end up being behind the momentum.
Yeah.
So there's this balance of, and I learned it. My very first education came from a very popular guy on social media, Tim Sykes. He's a social media giant in terms of trading penny stocks. And a lot of the phrases that he taught me are still stick with me to this day. And one of them is, don't catch a falling knife, and don't buy old sushi. So the idea is that you could go over and pick the knife off the floor, in a safe manner, versus trying to catch it on the way down. And the old sushi idea is, he said in his lessons that he grew up Jewish, so he made fun of that a bit, said that he was very economically motivated, in terms of value, always looking for a deal, and he said, but I'm not going to buy old sushi. It's going to make me sick. So the idea is that with momentum plays, it's much harder to discern value. And a momentum play is something like cryptocurrency, a lot of the COVID vaccine plays that come from a penny stock or a unknown company. Those are called momentum plays. And they're a lot harder to discern value, because they move in a way that's not natural to the overall market. They are buying that begets buying, and selling that begets selling in a snowball fashion, rather than a economically sound fashion. Because normally in the market, there's cycles. Virtually every market happens in cycles. There's a tugging of buyers and sellers, supply and demand, and always a process of previous buyers taking profits and sellers who are underwater also taking profits. So those things are always happening. And with momentum plays, those cycles aren't occurring naturally. So that's just a little guidebook into the differences. There is definitely differences in the market in how stocks move, and even highly valued stocks can be considered momentum plays, because like Tesla, more recently, that was most certainly a momentum play. It's a real company. Absolutely, it's a real company with real products in the pipeline. But it's harder to determine value when something has moved without any buyers taking profits. So with those types of situations, generally I'm in very small size, or if I'm in large size, it's with a very tight risk.
And is that
So
part of you? Is that part of your learning with that? So, like you said, like with Tesla, for example, if you're going to put a little bit in, you're not necessarily looking to make or lose money on it. You just want to learn the pattern and understand what it's about. Is that?
Yeah, that's what I've really started to value, is understanding where the opportunities are, understanding where you can feel safe and relatively stress-free, is generally where you want to plant a flag. Because what a beginner goes through, especially in the first year, if not the first 2, maybe 3 years, is a lot of stress in the market. You know, you got to deal with some pain of being underwater.
Yeah.
You know, you deal with the elation of winning. But for me, I found a lot of joy and honestly consistency in trying to find things that were lower size, uh, that I could just get familiar with the action and slowly develop a swing plan. And then what I do is I size in all in at the right moments. I try to assign a probability to the moments that are gonna move the hardest. And like for yesterday was an example. I was at the beach, and I really didn't want to bother with the market too much, but I knew that the market was tanking or could tank. So I viewed it as an opportunity to take at least a little small size. So I ended up, I think I traded $1,800 in my account total, but it was only 10 shares at a time, and it was on that negative ETF TZA, which takes a bet on the market going down. So I was at the beach, you know, it wasn't stressful. All I did is I put in the 10, it went against me, I was wrong, so I stopped out, and then I just bought another 10, and I was right that time, and so I just followed it with a stop. Every 5-10 cents it went, I moved my stop up. Super comfortable. I wasn't stressed. And that's what a lot of the traders in the financial market, especially more recently, they're looking to try to find those low stress trades. So for a beginner, you know, I would say the biggest things to keep in a person's mind is that this is and I'll quote Tim Sykes, this is a marathon, not a sprint. And the education most certainly has to happen before any type of income. And if you really want to be good at this, you got to set aside 4 years. That's pretty reasonable to just get a something to stand on. You know, even if it's just a few bucks that you made yourself, but you know the process that went in, a repeatable process. That is where it's at. You know, you can be in the 10 to 5%.
So that's so for me, novice on this is all about, and the next several years are all about education here. That's where we are.
Yep.
Okay, that's good. Where are you on your journey? How many years are you down the hole so far?
I'm actually I'm in my 4th year.
Yeah.
July would be. I started in July 4 years ago. I was laid up in bed. It was about the same time as I started writing my first book as well. I was laid up. I had the flu, summer flu, and I was just in bed. And I came across some lessons, and I'm like, I just dialed it down. The first one was 14 hours, you know, and I learned all about floats and charts and all of it. But I don't want to overwhelm our listeners today. We've covered a lot.
Well, that's what I'm thinking. I've got a couple other questions I was going to ask, but what I want you to do, if I start asking too many things, say put a pin in that, and we'll come back to that in the future, because there's a lot, and I think it's just terminology. So one you mentioned a couple of times was swing trades. So what's a swing trade?
Okay, well, I'll go through a few then. A day trade is a trade that's made intraday. It's opened and closed inside a day. A swing trade can be as short as an overnight hold, which means that the trade is opened on a day, then held overnight into the next trading session, and then closed or continued, managed for a period of time, a few days. And then there's also the value investor, who most of us are familiar with, the person that buys a stock and then holds it for years, if not owns it indefinitely. So those are some of the different styles.
Okay, cool. That makes sense. And where You said you kind of steer clear of the day trading.
Generally, I don't open and close on the same day. I will manage a position intraday. I do that a lot, but I have a longer term view of the whole position generally. And two, I'll give you my number one favorite resource to learn about the market, totally free. And I spent thousands upon thousands of hours on this site. It's chartgame.com. And it's all real charts from the past that are put there outside market hours. And you can buy and sell over and over and over again. And it'll tell you how much you're making an hour. It'll tell you your probability, your win rate on each chart. It's really wonderful. And you can go through a whole market day from 9:30 to 4 in the chart. And I've went through a whole market day in 15 minutes. So if you set aside a day to do charts, you can go through, a few hundred charts in a day. Interaction with the market. Yeah. And that was one of the things I learned recently from Mike Bellafiore, because this is very similar to learning professional sport. It's a way to practice outside of market hours. So you can get an edge in terms of conditioning, because you're involved. It's like your involvement is doubled or tripled or like quadrupled even. Because you can speed up. It's like you can speed up the day.
Yeah. And it's like, I think when we chatted a bit before, you made a reference of it's like when you train for sports, if you were a football player or whatever else it is, the amount of time you spend training compared to the amount of actual time you spend playing, the training time just dwarfs the playing time. But you win in the training. That's where you win, isn't it? Rather than in the actual play. Right. It sounds like it's the same here. You
nailed it. Yep. Dead on. You nailed it.
Which I was saying that. I'm pretty sure I stole that from a previous conversation with that.
No, you nailed it. That is right. That's it. And I was having a hard time articulating it, but that is it. The winning happens in the practice, because the trading is so stressful in the moment. You have to figure out a way to be calm. And that's hard. And one of the ways I've seen to be calm generally is by protecting your butt and locking in profits. I noticed through simulations, that's one thing you have to do if you want to be successful at this in the long term is I know you like Google Sheets or have used Google Sheets before. Is that you? Maybe it's someone else I'd talk to. Okay. Well, Google Sheets is real nice with the spreadsheets. You can put in the ticker you traded, your entry, your exit, whether you lost or won, and how much. And you do 100 trades like that, and you say, oh, I really sucked at these momentum trades, but I was really good at these real companies, or vice versa.
So it gives you a good bit of perspective on what you're doing, and you can see a picture. Yeah. I like that. I like a bit of stats, so this is talking to me.
Yeah, and one of the things that I found is that my trades, instead of having a bunch of little losses, I could have a little wins if I just locked in a profit just a little higher than my entry. I would always, that's the number one thing to remember with trading is to cut losses quickly and then also to lock in profits, because I changed my win rate by simply just locking in profits on every trade. Even if there was just a little bit, it covered at least my entry, so that was a big learning experience for me.
So where you say when you lock in a profit, is that meaning you're right, it's made some money, I'm selling now, I'm out, I've got that money?
It's a little different than that. I have two styles. I'll lock in profit in order to allow me to hold it longer. So it would give me a little bit more flexibility, because I have profit, I can let it go against me a little bit.
Right.
It widens my range depending on the stock. And then also what I do, if I'm all in, on a ticker and I expect it to have a momentum push, like when the stock market tanked yesterday, what I do is I use a manual trailing stop. So I put in a stop at market, but as soon as I show a profit, like say it's 5 cents or something comfortable, I'll place my stop immediately 5 cents above my entry. So I'm at least, even if I'm making a buck, I'm not losing a buck, you know? And oftentimes, as you get more practice, even if you stop out, you can re-enter and you'll eventually be right, you know, in your entry, and then you can capture the whole trend. But it's this, that's why I say about the balance and the screen time. You almost have to learn how to juggle while standing on a ball. Very similar to like surfing, you know, being aware of the conditions out in the ocean, being aware of your board, being aware of your personal, you know, did you sleep good the night before? Did you have a cup of coffee this morning? There's a lot of feel involved.
And that's where you suggested before we did this that we were going to talk, and you coined the phrase that simulation is what today is, which I completely understand. And like you're saying, you've got to get your knowledge and you've got to get your practice. So where I jump around on what we thought was a format, but where I was going to steamroller ahead and say, right, I'm going to take a chunk of money, tell me where to put it, and we'll play around with it. I'm probably getting ahead of myself. I probably first of all need to set up a bit of practice, don't I, before I start chucking some money in?
That would be my suggestion. I generally feel like I do the student a disservice if I say open up a paper trading account right away with money in it, because what they often do is they'll let the paper trade side just sit there. And even if they put in a little bit of money, though,
the focus is all on the real money, not the play money. Yeah.
Yep. Yeah. But the long-term view, the long-term perspective of this is really where it's at. If a person's serious about learning it, start with chart game. I love that tool, and you will blow up. Virtually everybody blows up, you know, and you can even learn to use leverage on there, you know, which is a big learning experience for me, and I'm so glad it happened with fake money, because I went from, they give you 200,000 to play with, and you can long, which means buy, or you can short, which means sell, and you can also, it's either 3 or 5 times. I think you can choose 3 or 5 times the leverage on each side, which leverage means amplified. So in that account, I started with 200,000. I had some really good trades, you know, I got up to 400,000 and all the way back down to 12,000. I felt like I'd been hit in the gut, you know, and then I felt good, comfortable, all the way up to 70-some thousand. You know, I start getting loosey goosey up to 150, and then all the way down to 1,000. You know, I consider that blown up. And I did that a number of times. And if you look on my charts, I've been through 11,000 charts on there. And I am consistently profitable in simulation now, in both the simulation, the paper trading, and slowly in my cash account.
So you are doing both. So you're doing simulation and you've got some real money going on as well, yeah?
Yes. Generally, I just do real money now. But I do at times, I go back to the simulation for when I feel I need conditioning, for sure. And I still use the paper trading side of my account to track. Absolutely. Because I have a wide list of stocks that I'm tracking for specific prices. And I'll go into that, just the list I have in my phone today. I would say my best purchase of the day was C, which is Citigroup. Bought it on that real nice dip. Cisco, in terms of a company that is on the very low end of the trading as of this morning, I got in the 37s, which is an excellent buy for that company, in my opinion. Smaller price stocks move differently. They have the
Yeah.
ability to double and triple on good news. And I'm generally focused on tickers with high volume traded over 1 million per day. Absolutely. And I generally gravitate towards over 5 million. And
is
what
that
that tells
is that a
me,
long-term picture, or is that then there's a lot of activity going on at that moment and that's what attracts you to it?
the long-term picture, I look to see if there was enough buyers before there's a long selling downturn,
Yeah.
because my view of the market is that previous buyers would be future buyers unless there was some other type of new catalyst that would bring new buyers into that company. So with the tickers being supply and demand, if I'm buying something on a dip, I like to see that there was previous demand, a lot of demand, because it would be indicative of future demand.
Yeah.
So that's my focus. It's all on high volume, whether the price is low, as low as like GE, it's trading very low, but GE has very high volume for a low price ticker. JetBlue, American Airlines, those are examples of lower price tickers with high volume. Excellent trades on both of those this year. I don't try to catch falling knives. I don't get involved in the trying to buy something as it's pushing, but I do bottom pick with small size and then slowly size in with larger size and all in once it starts to move in my direction. Trying to think. I haven't made any big money yet. I'm still poor. I feel like I'm wealthy in some of the education I've picked up.
But this has got to be, it's like you said, it's not about those one-off big wins or big losses. It's about consistency and knowing what you're doing, right, and learning it. And you're close to taking your training wheels off your bike as you're in fact you're just over your 4 years now, aren't you? You said was it July just gone? Yeah. So you're flying now. You graduated, got your certificate.
Yeah. And one of the things that they tell you generally for any new skill is to the 10,000 hour.
Yeah.
And I feel very comfortable that I'm there, and it's a lot like personal fitness, and I had to really go through a lot. I had to get to the bottom to appreciate either of them. And trading is a lot like personal fitness, where you just start with one push-up, you just start with one sit-up, you start with learning a company's name, playing a few simulations, and it's not hard to make money in the market. It's actually really easy to make money in the market. What's hard is holding on to it. Many people, they can make money, but then they can't hold on to it. So it's very possible for a person to make money.
Yeah.
They just need the discipline day in and day out. And one of my other instructors, he has a big group of students, and one of them was getting upset at the other. How did so make so much money? They're a dumbass, he goes. They're a dumbass. And this guy's name's Bao. He says, discipline. I'll quote him. That's Bao, Modern Rock. He says, discipline. And the same thing with personal fitness is like, if you have a goal, believe in yourself. Like, there's not very many trials that are unique to us. Anybody who we looked up to, they went through some stuff, and they're probably doing the same stuff you're doing.
No, it's good. I feel like my eyes have been opened a bit to what this world is, which I say, a complete novice. Some people listening now probably just enjoy the subject and will be listening on and can either relate to what you're saying or, looking for some good tips. Some people, I hope, are like me, and you're just starting on this journey. There's a lot there that started to click some stuff into place for me. There's some other stuff you said that completely went over my head, but I'm sure as time goes.
I'm sorry.
No. This is what it is. You've just got to immerse yourself in it. That's how I learn, and a bit of it's through doing and immersing yourself in your culture, and hopefully I'm helping expose people to that. And what I'm going to really enjoy is in about 12 months' time, listening to some of this, that completely went over my head that will just make complete sense. And this is and it's what you said when we're doing this, and actually it's my style when I'm at work and stuff, if I'm teaching people, is it's like a puzzle. It's not completely linear. You don't know stuff without diving in a bit. And there's just bits of that puzzle, like this top corner and this bottom bit and this middle bit have started to slot into place. And over the weeks, we'll just build this up and build it up and build it up. And what I'd like to do, if it works for you as an idea, and this is us production meeting on air, which is something I like to do because I make it up as I go along, is with Chart Game, if that's what you said, where you go on, set up an account, start doing some trading, is I want to pick my first trade with you as we'll do this. I'll share my screen, you'll talk me through it, and live time, I'll start my journey with everyone listening or watching, and we'll start to show, and it'll give a bit, hopefully, an insight into your thought processes. See what I do right, do it wrong if that works, and we'll start. I'll start my simulation journey live on air, and we'll track it as it goes. And if people want to do as well, either between now and next week, go on, have a look at the site, start poking around, or actually we'll give people a walkthrough, and maybe a few people will set up accounts with us at the same time, and you can take them on that journey with me.
Yeah, that sounds great. I'd love to share the information. Like we talked about in the beginning, neither of us are professionals. We're not giving you any advice, but what I've learned is definitely valuable, and the people I've learned from know what they're doing. So I'm great. I'm great. I'm excited to be with you and to go on this journey together.
I'm excited about this. It's really, I'm already hooked into what this can be. Again, hopefully this will be a good learning journey for people going with us, as well as we go through this. I'm genuinely excited about this. And we talked about, obviously, so there's a lot of stuff there for people like me who are a novice, or people who just love listening to the subjects. It's always great to have a different perspective on it. But are there any particular stocks right now that you're following that we'd like to, if we can, give out a couple of tips for people on something that's looking interesting right now that maybe you want to give out as your tip to people already in the market, either simulation or with real money?
Sure. Well, I can give a little bit of the scope of the market today. The market had been in an indecision area, so I was just generally looking for opportunities. If the market breaks below the 320s in the ETF that represents the SPY, I would look to be selling generally, or repositioning in any of the tickers that I was involved in. Generally, my number one for today was looking for a good price on Cisco. The reason being is Cisco had a miss, I believe it was with its earnings a number of months ago. It had very high volume selling pressure, and then it had a period of time of volatility where buyers went up, took profits. I even had a few good trades in it, but then those buyers are under pressure by another round of selling. So each round of selling for legit companies leads way to another potential buying opportunity at a better price. So for me, Cisco, it may have already passed the entry that I was excited about, but 37 was an area that I was looking at, and also Citigroup for today. And then when if the overall market breaks that 322 area, I'd be looking to take a negative view on both the technological part of the market, which is represented by a ticker FNGD, which takes a negative bet against Facebook, Netflix, Google. Trying to think. So that part of the market, and then the TZA takes a negative bet against frothy small caps, and both of those are 3x, so they move 3 times quicker than the overall market. So it's a good way with small size, if you are listening to this and you are an investor, to look for those ETFs if the market does go down, to maybe put a little bit of money in those. So that's my picture of the market right now. I feel like it's kind of been a period of indecision with a little bit of a rebound, but the rest is kind of yet to be seen. I don't have a crystal ball. I kind of just piggyback on what it does.
Oh, that's good. And we'll keep throwing out tips each week. As Eve said, we are, and I certainly am no experts in this. This is not financial advice, information and opinions only. That's it. I think I've covered a disclaimer there. That's as best as I can do.
Very good.
I'll pick out a pattern of some
fun.
wordings as we go forward. This is it. We're here to help, to educate, and to have a bit of a laugh along the way as well. And
That's
maybe one day we'll hit that massive trade.
There we go. Yep.
Well, that wraps up for this week. We will be out each and every Thursday across all podcast platforms. So Apple Podcasts, Google Podcasts, Spotify, anywhere else you listen to podcasts, we will be there. We're on YouTube as well. Just search for Black Phoenix Financial Podcast. Follow us on Twitter and Instagram. We are at BP Financial Pod. We appreciate any follows we get. Share the content, build up the amount of people that can see what we're doing. And of course, follow Ethan at T4A Phoenix. That is PHENUX. Lots of great insight and stock tips and a few funny tweets on the way as well. Thank you everyone for listening. We hope you've enjoyed our first episode. We'll be back again next week.
Thank you, everyone.
We'll see you next week.